Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 3rd, 2024. I'm sorry for the late report. I've been running around all day today, just got back in getting it out. We see the first 2 days, we're seeing some selling in the market and pretty decent size. I mean, 38 down 38 today. It was down almost 40 yesterday, but closed only down 25. And it's a lot of it has to do with just the rhyme and reason for the massive run up that we had that started in late October, where it's a lot of people inflation numbers are coming down, but that was really because oil was coming down pretty hard. And they took the Fed's the pivot and just ran with it like they always do. And one of the things I just think they went way too far, way too fast. But again, I'm not looking for any kind of crash. I'm looking for a decent, healthy pullback where at least we're going to come down into this, to close some of these gaps. So anywhere 44.21, we could even come down to this 45 level, 4,500, but more than what we've had, because this is kind of unsustainable, the type of move we had. So remember what I showed you yesterday with the head and shoulders pattern, and this is here's the neckline right here. So this was the left shoulder. I said this would be the neckline right here. We'd find some support, get a bounce. We have the 50-day moving average that's at 47.45. So this will be resistance. But then we also have this gap up at 47.61. So if we get some kind of bounce where 50, 55 points to the upside, the bulls that have been buying these dips the whole time are going to be like, okay, we're back in the game again. And if they set this pattern up and head down, notice they're really it's air until we get down into this the 45.40 level where there is some support. But if they lose that, then there's really no support until we start getting down here. So it's a one of the situations where the bulls are at the top floor right now, and there's no safety net whatsoever. Where if this pattern, let's say that they don't even form this pattern and they come down and they test this the 200-day moving average 46.56, and then bounce back up and use this as resistance and come back down. Everybody's been buying this dip because they've been trained to buy the dip. Even when we had this big drop, when you bought this dip, you made money. So everybody's buying the dip, and we've now had 2 down days in a row, which is they have not had that in since October. So it's like I said, it's a very dangerous market right now, and it's just short term. Let's say that I'm not saying long term. It could turn into long term, but we don't really look out that far. And Woody's looking for some type of euphoria top to come into the spring. So I'm trying to use my technical analysis to kind of use that until something changes. But right now, as I said, we've had sell signals on almost every chart, and especially when you start seeing them on the daily charts and the longer term charts like the put call ratio and the stocks above the 50-day moving average, they typically lead to anywhere from 150 to 300 points on the either upside or downside, depending on where the those technicals are. But it's not just a 50, 60 point move, because that's not really going to release any of the overbought pressure that those see. That they don't move very quickly like the like the stochastics or the price oscillator. They take a lot of time to turn. So they're at extremes right now. So I wouldn't be surprised to see a very choppy market, but a little bit of a bias to the downside. And as I said, seeing the move coming down into the 4,500, this would make the most sense. And I know I said this last night, 44.21, because we're closing a gap. And then if we go and look at the daily chart, it actually it matches up with here we have the 45.82. So this is the 50-day moving average. Below that, here again, it's air until we get into this area here. So seeing this would actually give some doubt to these people that have just been buying every dip this way up. Even if you look, this is the first. Well, we had 1, 2, 4 days on the downside. I didn't even realize that. But in any case, we've had some pretty good days on the downside, and this is the major support. If they lose it, bare minimum, we're coming down to 46.34, most likely coming down and testing the 50-day moving average, where I would anticipate we're going to get some kind of bounce. But coming down and testing these areas is where, again, I think it's going to be healthy for the market because, especially for the bulls, if they wanted to go higher, because it's not sustainable when you make these kind of moves. So getting some doubt into the market will get some people shorting and then give them the say the fuel to move the markets higher. But these are, you have some pretty good bearish divergences on the daily charts, and as I've been showing you in the premium reports, my longer term, uh, technicals that I follow, they're giving all out sell signals. So let's just take it one day at a time. Right now, if we get the bounce, I would expect that sellers would come in if the bears are going to try to hold it down anywhere between the 47.40 up to the 47.70. Again, if it gets up here, it's going to lure a lot of the bulls, and this could be making the right shoulder. And from here, we're looking at almost 100 and about 100 point move to the downside, and that would bring us down to the 4600. But once we get into the 4600 area, it's there's nothing but air except for this moving average. So as I said, I'm staying open minded on this. I still think that we have more room on the downside. I think that the market's very, very dangerous just because so many people are anticipating that you're going to see the S&P at 5,500 by the end of the year. Market's not going to go down. Inflation's gone. The Fed's going to cut rates. All that is just speculative. And right now, what I look at is giving major, major warning signs. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.